Today is Wednesday, January the 15th, so I'm back at home on my computer, back working on Motive Wave. Thank you very much for bearing with me the last couple of days while I was using an iPad and Thinkorswim. Actually, my daughter was having surgery out of town, and she's only 20 years old, so her mom and I needed to be with her in a hotel room to help her recover, and things are okay. But thank you all very much. It was minor surgery just for a deviated septum. She was having trouble breathing, and that was leading to sleep apnea and lots of other problems. Anyways, what we see today is that consistent average volume, which if you remember when we did these videos, we've been doing them for months now, we were seeing consistently low volume. Now we're seeing volume more consistent with an average day in the Dow and above average in the NASDAQ. And that's what we saw Monday and Tuesday. Let's just refresh this and make sure everything's new. We've got a lot of green happening here. The healthcare bounced back from yesterday. It was red. Now it was the financials' turn to be a little bit red. And that was a little bit due today to U.S. Bank. Disappointing. Bank of America, I think, also reported, and I guess they must have disappointed too. They're down 1.8%. And JP Morgan, who really surprised to the upside, dropped 1.5%. And I don't know where Goldman Sachs, here's Goldman Sachs right in here. They reported pretty strong earnings, and they were green today. Maybe we'll see Goldman Sachs a little bit better here. Yeah, only, wow, actually down 0.2%. But the advancers led decliners again by, I think, about the same amount as yesterday, which is going to take our stock breadth a little bit high. We had 2 days where it didn't move. So it's going to move a little tiny bit higher. So that was that's been a fairly solid bounce off the neutral line. And it's looking good, but look what you see down here. VIX is not confirming the higher prices. So take a look at that article, read about it, see what it has to say. It's on the mcoscillator.com site. So after we finish this video, I'm going to come back and read that. So the SPX was up 6 points, and you can see that we again are moving even further away now from the cloud. If we take this line and we move it up to here, and we say, is that the top of the, let's just move this up to, where's the top of it? Let's say right there. So we're maintaining our distance from the cloud at about 162 points, 163 points. It's a long time to be that far away from the cloud, folks. And as we're getting closer to this 100%, we're getting closer to more reasons why we should be having a healthy pullback. Apple down $1.21, starting to show what we saw in the stochastic momentum indicators. In other words, the fast moving is dropping, and the slow moving, which had plateaued for some time, now is also starting to move down. So we're going to see a little bit of profit taking in Apple. February 1st is when they have their earnings, and you can expect, I think you can expect blowout earnings thanks to the iPhone 11, thanks to China, thanks to the AirPod Pro. I personally bought the Power Beats wireless. They're fantastic. And did I already say China sales? And China sales. Caterpillar down 90 cents, continues to just bury itself in this channel, but it's coming down to meet the cloud. Let's take a look at the volume. Volume a little bit low. Coming down now, we're below the 50 SMA. Probably going down to the 50 EMA, but actually we're probably making a move for the cloud. And today the China deal was signed, and you would have thought that that would have been great news for Caterpillar and agricultural commercial stocks. Well, for a Caterpillar, it wasn't. We should take a look at Deere sometime and take a look at how it's doing. Home Depot, which we're out of, was up $1.83 today. The resistance was right here, which is pretty much the 50 EMA for the Chiku span, but very low volume. Flat cloud, Home Depot probably, is on its way up again. I'm just out of it. AT&T down 19 cents, which to me is fantastic because I thought that we would get below 38. I was hoping we would get below 38 because I rolled my short 38 calls into March so that I wouldn't lose my stock and I'd get the 52-cent dividend. Today I did the same thing with Caterpillar. I moved my 135 calls. Now they're way in the money, and they definitely would have been taken from me. Yesterday I moved them to February's for 41 cents and didn't feel safe that they wouldn't get taken from me by somebody who wanted the $1.02 dividend. So I rolled them into March, and I'll know tomorrow morning if somebody was aggressive enough to take them away from me for March. But I made $1.07 on that roll, which is better than having the dividend. So if they take them away from me, that's fine. I get to keep the $1.07 that I rolled into March. I'll lose the stock, but I'll come back and I'll buy Caterpillar again. I won't get the dividend, but I will get the $1.07 on the roll that I made till March. And that's good enough for me. That, to me, that's the same as the dividend if they want to take my stock. Whirlpool, I added to Whirlpool today. This time I took March 155 160s, and I took 3 contracts there. So I think that I have quite a few contracts now in Whirlpool. I've got 6 150 160s in February, and I've got 3 155 160s. I'm up $741. But at one point today, I was up, about $900. Whirlpool ended up sort of at the bottom of the range of its day. So that 68.1% was a bit of bad news. But look at the volume. The volume showed that there was some institutional or big buyer involvement. So that's 3 days in a row now where we've had volume encouraged by big buyers. That's a good sign. We're off the cloud, and we've got the Chiku span, which is going to have a date with the top of the cloud, but generally we're going up, and 154.66 is still going to be our target over the next couple of days. So I'm really pumped about Whirlpool. I'm glad I'm into that. Shopify, definitely moving away here. So if you got into it, fantastic. Amazon, not so fantastic. My position now in Amazon is down $316. I'll let it go to down $400 and then I'm out. But very low volume today. Although we did have good volume yesterday, low volume today. Let's take a look at the cloud and see if there's anything that we need to see there. Long way to go before the cloud is of any significance. And on the weekly, the cloud should be able to provide support if we come down. Now, the Chiku span has gotten through these averages. There's a big candle that it could try to bury itself under, but that candle is 2 weeks out, right when its earnings are coming into play. So keep an eye on that. I'll lose $500 on Amazon before I'll get out. Now we're below the 50% after getting rejected near the 68.1, so the Fibonacci's are good there. We should have support at 1827, but I won't be in the stock if it goes that low. That's the 50 SMA. I have February, so there's only 37 days left. So you don't want to lose too much money on something that's only got 37 days left. My delta in that position now is only 7. And my time factor is 350 a day. 7 is not very great. It's not, if the stock turns back up again, it's not going to move very quickly. So yeah, I would get out of it probably at $400 loss. So if I hit $400 loss tomorrow, that's another $85. Then I'm out of there. What else do we want to look at? Well, that's the stocks that we look at usually. Glad to be back. The VIX, let's take a look at the VIX. Volatility index is still showing no sign of fear at 1242. So the market is not really worried at this point. We're still hugging this green line, which, I've called our historical low since the beginning of last year, January of 2018. It's our average low point, and that's where we are now. I'm going to take the Ichimoku out of there, just clean it up a little bit. But when the market does get scared, you can see that the fear gets less and less fear here, and here, about the same here, less fear, less. Complacency is not a good thing in the market. This could spike up fairly quickly. Look what happened in July. Look how quickly the fear index spiked up in just a matter of 1, 2, 3, 4, 5, 6, 7 days. It just went out of control. So keep an eye on the VIX. In the meantime, the S&P still looks like it's moving up, definitely going to 33, 36, but that is going to extend it a long way from the cloud. If it gets up to there, that's going to put it actually closer to the cloud. So maybe, that's not such a stretch. Let's just keep an eye on it. I continue to be conservative still with 50% cash. Call me crazy, but I'm very happy with the my positions right now. Feel comfortable, able to sleep at night.